The banks just smashed the paper price of silver to $61.96. They want you to believe the rally is over. They want you to believe that silver is just another speculative bubble that finally popped. But they are lying to you. This is not just a small lie. This is a lie of omission so massive it borders on criminal negligence. While the algorithms were dumping paper contracts in New York yesterday, something happened in South Korea that makes the current price of silver completely irrelevant. Something happened that changes the fundamental chemistry of the global energy transition forever. Samsung SDI, one of the largest battery manufacturers on this planet, just quietly confirmed the final specifications for their new solid-state production line. The mainstream media is calling it a battery breakthrough. They are talking about a 900-mile range and a 9-minute charging time, but they are missing the single most important detail. The detail that Wall Street has not priced in. The detail that the mining companies are not prepared for. The detail that makes the current 1.1 billion ounce deficit look like a rounding error. The secret ingredient in the new battery from Samsung is not lithium, it is not cobalt, it is not nickel, it is silver. And we are not talking about a trace amount. We are talking about a massive structural increase in silver consumption per vehicle. We are talking about a technology that moves silver from being a precious metal to a strategic energy metal. In this deep dive, I am going to expose the silver bomb that Samsung just dropped on the global supply chain. I am going to walk you through the chemistry of the silver carbon anode. I am going to do the math that the International Energy Agency refuses to publish. The math that proves there is not enough silver on Earth to electrify the global fleet using this technology. And I am going to show you why the recent price drop was not a crash. It was the last chance you will ever have to buy silver before the auto industry realizes they have made a fatal calculation. The banks are playing a paper game. Samsung is playing a physics game. Physics always wins. This is the story of the silver carbon revolution. To understand why the news from Samsung is an extinction-level event for silver supply, you have to understand the fundamental failure of current technology. For 30 years, the world has run on lithium-ion batteries. Your smartphone, your laptop, and the Tesla Model Y in your driveway all use liquid electrolyte lithium-ion batteries. They have been the gold standard since the 1990s, but they have a fatal flaw. It is a biological growth called the dendrite. When you charge a lithium battery fast, or when you charge it too many times, the lithium ions do not always distribute evenly. Instead, they form tiny, needle-like crystals called dendrites. These crystals grow like jagged roots inside the battery. Eventually, they pierce the separator, which is the thin wall between the anode and the cathode. When that wall is breached, it creates a short circuit. The result is thermal runaway. This is why electric vehicles catch fire, and why those fires are nearly impossible to put out. This is also the reason why your electric car takes 45 minutes to charge at a station. You have to pump the energy in slowly to prevent those dendrites from forming. It is the reason why batteries lose range in the winter, and why they degrade after only a few years of use. The global auto industry has known this for a decade. The holy grail has always been the solid-state battery. A battery with no liquid, no fire risk, instant charging, and double the range of anything on the road today. Every major player from Toyota to Volkswagen has been promising this breakthrough for years, but they all failed. They failed because they could not stop the dendrites from forming on the anode. Graphite anodes were too weak. Silicon anodes expanded too much and cracked the battery casing. Pure lithium metal anodes were too unstable to handle the heat. Then the researchers at Samsung SD found the solution in the periodic table. They discovered that one specific element, when applied as a nanocomposite layer, completely solved the problem. This element allowed the lithium ions to move freely but stopped the dendrites cold. It was stable. It was conductive. It was perfect. That element is silver. Specifically, a silver carbon nanocomposite layer. This is not just a theory in a lab. This is published science. Samsung is moving this from the whiteboard to the production line. But as we are about to see, solving the physics problem created a massive resource problem. By fixing the battery, Samsung has accidentally started a run on the silver market that cannot be stopped. The silver carbon nanocomposite layer is the heart of the silver bomb. To understand why this is a revolution, you must understand the role of the anode. In a traditional battery, the anode is made of graphite. It is bulky and heavy. Samsung has replaced this with a silver carbon layer that is only 5 micrometers thick. For context, that is about 1/10 the thickness of a human hair. This incredible thinness is what allows the battery to be smaller and lighter while holding much more energy. This is how Samsung achieves a 900-mile range in a vehicle that does not weigh more than a traditional truck. But the real magic of silver is how it handles lithium. During the charging process, lithium ions rush toward the anode. In other batteries, they pile up and create those dangerous spikes we call dendrites. However, When those ions hit the silver carbon layer, the silver acts as a magical host. Silver has a unique metallurgical property that allows it to dissolve lithium and then release it evenly. It creates a perfectly smooth plating of lithium metal. This prevents any jagged edges from forming. Because there are no spikes, there are no short circuits. Because there are no short circuits, the battery can handle a massive amount of power all at once. This is how Samsung delivers a charge from 10% to 80% in just 9 minutes. You can now charge your car in the time it takes to buy a cup of coffee. This technology is not just an improvement, it is a total replacement of the old system. The scientific community has verified that the silver carbon anode is the only stable way to mass-produce solid-state batteries today. Samsung holds the patents, Samsung has the pilot lines, and Samsung has the results. But here's the catch that the mainstream media is ignoring. This silver is not a catalyst. It is not something that can be used and recovered easily. It is an active part of the battery DNA. It is consumed in the manufacturing process to create that vital nanolayer. For 30 years, silver was used in electronics in tiny amounts for its conductivity. It was the spice in the soup. But in the Samsung battery, silver is the main course. For the first time in history, the auto industry is moving toward using silver as a structural material. They are about to scale this technology to millions of vehicles. The question is no longer if the technology works. The question is, where will they find the metal to build it? You might be thinking that a layer only 5 micrometers thick cannot possibly use that much silver. That is the mistake Wall Street is making right now. Let us do the math that the analysts are too lazy to calculate. We need to look at the context of silver consumption in the automotive world. Right now, a standard internal combustion car uses about 15 to 20 grams of silver. It is found in your window switches, the seat motors, the defrosters, and the electronic control units. An electric vehicle uses more, typically between 30 and 50 grams. This is used in the inverters, the battery management systems, and the high voltage cables. This existing demand is already draining the market. It is one of the primary reasons why we have a 1.1 billion ounce deficit. But the solid-state battery changes the math entirely. We are no longer talking about small switches or wires. We are talking about coating the anode of every single cell in a battery pack that weighs over 1,000 pounds. According to the technical papers published by Samsung SDI, the silver loading in these cells is significant. Early estimates suggest that for a high-performance, long-range battery pack, the silver requirement could be as high as 500 grams to 1 kilogram per vehicle. Let us be conservative. Extremely conservative. Let us assume the industry finds a way to use only 100 grams of silver per car. That is still double or triple the amount used in today's most advanced electric vehicles. There are roughly 90 million cars produced globally every year. If just 10% of those cars switch to solid-state batteries, that is 9 million vehicles. 9 million cars multiplied by 100 grams is 900 million grams of silver. That equals roughly 29 million ounces of new annual silver demand. That might sound manageable until you realize that is just for 10% adoption with the most conservative numbers possible. If the silver loading is actually 500 grams, as some researchers suggest, then 10% adoption requires 145 million ounces. If the world reaches 50% adoption of solid-state batteries by the year 2030, the demand for silver would jump by over 700 million ounces per year. Where does that silver come from? The entire global mining production is only about 830 million ounces per year. This single technology has the potential to consume nearly 80% of the entire global mine supply. This would leave 0 silver for solar panels, 0 silver for electronics, and 0 silver for investment. The math of the Samsung silver bomb is clear. The automotive industry is about to collide with a geological wall. When the demand for a digital product explodes, you simply add more servers. When the demand for a software increases, you scale the code. But when the demand for a physical element like silver explodes, you are at the mercy of the earth. The most dangerous assumption held by the auto industry right now is that the miners will simply dig faster when the price goes up. This is a fundamental misunderstanding of geology and capital. You cannot print a silver mine. On average, it takes between 10 and 15 years to take a silver mine from the initial discovery to full-scale production. This means that if we found a massive new silver deposit today, it would not produce a single ounce of metal until the year 2035 or even 2040. But Samsung is building their production lines right now. They are aiming for mass production by 2027. There is a decade-long gap between the birth of the technology and the birth of the supply. This is a supply chain collapse in slow motion. Furthermore, we must look at the state of existing mines. Global silver production is not growing. In fact, it has been flat or declining for years. In the year 2005, a high-quality silver mine might produce 15 ounces of silver for every ton of rock processed. Today, that number has collapsed to only 4 ounces per ton. This is known as grade depletion. To get the same amount of silver today, miners have to move 4 times as much rock, use 4 times as much diesel, and hire 4 times as much labor. The cost of production is rising exponentially while the amount of metal being recovered is shrinking. The banks and the analysts at companies like Goldman Sachs keep telling you that there is plenty of silver above ground. They point to the vast quantities held in London and New York, but they are ignoring the fact that most of that silver is already spoken for. It is owned by exchange-traded funds, private investors, and industrial users who have no intention of selling. When Samsung and Toyota enter the market to buy 10 million ounces at a time, they will not be buying paper contracts. They will be looking for physical metal. If the metal is not there, the price does not just go up a little bit, it gaps up. We are approaching a moment where the price of silver becomes secondary to the availability of silver. If you are an auto manufacturer and you have spent $10 billion on a battery factory, you cannot afford to let that factory sit idle because you are missing a few million ounces of silver. You will pay any price. This is the definition of inelastic demand. The Samsung silver bomb is about to trigger the greatest bidding war in the history of the commodities market. The supply of silver is not just a matter of geology. It is a matter of geography and politics. When you look at the global silver map, you see that the majority of production is concentrated in just a few nations. Mexico and Peru combined produce nearly 40% of the entire world supply. For decades, these countries have been the reliable backbone of the silver market. But that reliability is vanishing. We are hitting a geological wall that is reinforced by a political one. In Mexico, the largest silver producer on Earth, the government has taken a hard line against the mining industry. They have stopped issuing new permits for open-pit mining. They have increased taxes and introduced new regulations that make it nearly impossible for foreign companies to expand. At the same time, the existing mines are fighting against declining ore grades. The easy silver is gone. What remains is deeper in the earth, harder to reach, and more expensive to extract. Mexico is no longer a growth story for silver. It is a story of managed decline. The situation in Peru is even more volatile. The mining industry there faces constant strikes, road blockages, and social unrest. Local communities are demanding a larger share of the profits and are increasingly concerned about the environmental impact of mining. We have seen major operations shut down for weeks or even months at a time. When you combine the political instability of Peru with the regulatory crackdown in Mexico, you realize that 40% of the global silver supply is under extreme pressure. And we cannot forget about Russia, another top producer. Due to ongoing sanctions and geopolitical tensions, Russian silver is largely cut off from the Western markets. This creates a fragmented supply chain. While the world is demanding more silver for the green energy revolution, the primary sources of that metal are shrinking or becoming inaccessible. This is a pincer movement. On one side, you have the explosive demand from the silver-carbon anode. On the other side, you have a supply chain that is starving for capital and facing a hostile political environment. This is why the Samsung silver bomb is so dangerous for the status quo. In the past, silver was seen as a luxury or a simple industrial component. But in the age of the solid-state battery, silver becomes a matter of national security. If a country like South Korea or the United States cannot secure a steady supply of silver, their entire automotive industry could collapse. We are moving toward a world where silver is as critical to the global economy as oil was in the 20th century. But unlike oil, you cannot simply pump more silver out of the ground by turning a valve. The geological wall is real, and the world is about to run into it at full speed. Whenever a commodity faces a shortage, the skeptics always point to recycling. They tell you that as the price of silver rises, billions of ounces will flow back into the market from old electronics and scrap. But this is the recycling myth, and it is a dangerous misunderstanding of how silver is used in the modern world. Unlike gold, which is almost always recovered because of its high value, silver is being systematically destroyed and buried every single day. Let us look at the numbers. Gold has a recycling rate of nearly 90%. This is because gold is usually found in large, concentrated amounts like jewelry or heavy bars. Silver is different. Silver is the vampire dust of the industrial world. It is sprinkled in microscopic amounts across billions of devices. There is a tiny fraction of a gram in your smartphone. There is a small amount in your laptop. There is a thin film on a solar panel. In these cases, the silver is so dispersed that the energy and cost required to recover it are often higher than the value of the silver itself. As a result, silver is not recycled at 90%. It is recycled at a rate of less than 20%. We are literally burying billions of ounces of silver back into the earth every year in the form of electronic waste. But once it is in a landfill, mixed with trillions of tons of other trash, it is gone forever. It is a form of molecular entropy that we cannot reverse. Now, consider the new silver carbon battery from Samsung. Yes, these batteries contain much more silver than a smartphone, but think about the life cycle of a vehicle. When a car is sold in the year 2027, that battery is designed to last for 15 or even 20 years. The silver that goes into a Samsung solid-state battery is locked away until the year 2040 or beyond. It is removed from the global supply pool for an entire generation. The recycling wave that everyone is hoping for will not arrive in time to save us from the shortage of the 2020s or the 2030s. We are facing a structural deficit that recycling cannot fix. The consumption of silver in the green energy transition is destructive consumption. Once that silver is turned into a nanocomposite layer or a silver paste for a solar cell, it is taken off the board. We are running a global experiment where we consume a finite resource faster than we can find it, all while telling ourselves that we can just recycle our way out of the problem. Samsung knows the truth. The auto industry knows the truth. The recycling myth is over, and the era of the silver shortage has begun. We are witnessing a fundamental shift in how the world perceives silver. For centuries, silver has lived a double life as both a precious metal for investors and an industrial metal for manufacturers. But because of the Samsung silver bomb, silver is entering a third category. It is becoming a strategic energy metal. This transition changes everything, especially how governments around the world will react when the shortage becomes undeniable. In the 20th century, the world fought wars over oil because oil was the lifeblood of transportation and power. In the 21st century, that lifeblood is shifting to the periodic table. If you do not have lithium, nickel, and now silver, you do not have a transportation industry. Governments in Washington, Brussels, and Beijing have already mandated the end of the internal combustion engine. They have legally forced their entire economies to transition to electric vehicles. They have bet their political reputations on reaching net zero carbon emissions. But what happens when the math does not work? What happens when a company like Ford or General Motors tells the White House that they cannot meet their production targets because Samsung and Toyota have bought every available ounce of silver? The government will not simply say, okay, forget about the electric vehicle mandate. Instead, they will declare silver a critical strategic material. We have seen this before. In the United States, the Defense Production Act gives the president the power to prioritize industrial production for national security. If silver is deemed essential for the energy transition, the government can intervene in the free market. They could prioritize industrial allocation over retail investment. This is the nightmare scenario for the silver stacker who is waiting for the perfect moment to buy. You might find yourself in a world where the price of silver is $100, but you are legally barred from buying it because every ounce is being diverted to a battery factory in Ohio or South Carolina. This is already starting. The United States and the European Union have passed laws that require battery materials to be sourced from friendly nations to qualify for tax credits. This creates a two-tier market. There is clean silver from stable allies and dirty silver from everywhere else. The competition for clean silver will be brutal. Samsung is not just a company, it is the heart of the South Korean economy. The South Korean government will move heaven and earth to ensure Samsung has the silver it needs. This is no longer a simple story of supply and demand. This is a story of national survival in the green energy age. Silver is the new oil, and the race to secure it has already begun behind closed doors. When the public finally realizes that their ability to buy a car depends on a silver carbon anode, the scramble will be unlike anything we have seen in the history of commodities. Knowledge without action is useless. Now that you understand the Samsung silver bomb, you must position yourself before the rest of the world catches on. But you have to be smart. In an industrial squeeze, the old rules of silver investing do not apply. You need a strategic playbook that focuses on the reality of the battery market. There are two primary lanes for this trade. Lane 1 is physical metal. This is your insurance policy. But here is the secret. In a true industrial shortage, you must stop paying for art and start paying for weight. For years, coin dealers have pushed semi-numismatic coins or limited edition prints with high premiums. They tell you these will hold value better. But when Samsung needs silver for a battery anode, they do not care if your coin has a picture of a movie character on it. They only care about the atom. They need raw silver to melt down into nanopowder. In a massive squeeze, the premiums on collectibles often collapse relative to the spot price. The strategy here is simple. Buy the cheapest, most recognizable government or corporate bullion you can find. Your goal is to accumulate the maximum number of grams before the industrial giants clear the shelves. 100-ounce bars or 10-ounce bars are your best friends. In the era of the silver carbon battery, ounces are the only metric that matters. Lane 2 is the mining stocks. This is where life-changing wealth can be created, but it is also where the most dangerous traps are hidden. You must avoid the hedged miners. Imagine a mining company that signed a contract last year to sell their silver at $30 an ounce for the next 3 years to guarantee a profit. Today, silver is $61. That company is losing $31 of profit on every single ounce they dig. Their stock will not move because they have traded their upside for safety. You want to own the unhedged miners. These are the companies that sell every ounce at the current spot price. If silver goes to $100, their profits do not just double, they explode. This is called operating leverage. A company that makes $5 of profit at $30 silver will make $75 of profit at $100 silver. That is a 15-fold increase in profit from a 3-fold increase in price. Furthermore, you must look at geography. Because of the strategic metal transition we discussed, a silver mine in a Tier 1 jurisdiction like Canada, the United States, or Australia is worth 10 times more to a company like Tesla or Samsung than a mine in a volatile region. These auto giants will eventually buy equity directly in these miners to secure their supply chains. You want to own the mines that the car companies are going to want to buy. Audit your portfolio today. Check for hedging contracts and check the map. The time to front-run the auto industry is right now, while the market is still distracted by the paper price. We are standing at the edge of a new era. The silver bomb dropped by Samsung is not just a corporate announcement. It is the first domino in a total transformation of the global economy. As we look toward the next 5 to 10 years, we must prepare for the reality of silver becoming unobtainium. This is a term used to describe a material that is so essential and so scarce that it effectively disappears from the open market. If the math we have discussed today holds true, and if the global auto industry pivots to the silver carbon anode, the retail investor is about to be priced out of the market entirely. We are moving toward a future where silver is no longer something you buy at a local coin shop. It will be something that is moved in armored trucks directly from the mine to the battery gigafactory. The price discovery will not happen on a digital screen in New York. It will happen in the boardrooms of global conglomerates and in the secret trade agreements between nations. Do not be distracted by the volatility of the coming weeks. The banks will use every tool in their arsenal to shake your confidence. They will hike margin requirements. They will release bearish reports. They will trigger flash crashes on the paper exchange. But remember the physics. A paper contract cannot stop a dendrite from forming. A short position cannot power a 900-mile road trip. Only the physical atom of silver can do that. Samsung has bet billions of dollars on this reality. The smartest engineers in South Korea have staked their careers on it. Your advantage is the information asymmetry that exists right now. Wall Street is still looking at the rearview mirror of 2020. They are still treating silver as a legacy industrial metal used for mirrors and spoons. They have not yet realized that silver is the foundation of the solid-state revolution. This gap in understanding is where the greatest opportunity lies. But this window of opportunity is closing. Once the first mass-market vehicle with a silver carbon battery rolls off the assembly line, the secret will be out. The panic buying will not come from internet forums. It will come from the procurement officers of the largest corporations on Earth. So, as we close this deep dive, ask yourself one question. When the world realizes that every high-performance car on the road requires a kilogram of silver, would you rather be the person searching for silver or the person who already owns it? The system has given you one last gift with the recent price drop. It is a chance to front-run the biggest industrial shift in human history. The Samsung era is here. The silver revolution is just getting started. Don't let them shake you out. Stay focused on the chemistry, stay focused on the math, and stay focused on the physical reality. The future is silver.